Hello, everybody. Welcome back to the Real Estate Underground by Vinny. My name is Vinny. As you know, I'm your teacher, your mentor, your guide. And again, I have with me Dr. Chris Clayton, who's still a doctor, but also, more importantly, a real estate investor who's got a lot of wisdom. And we'd like to bring him back and help everybody out with some stuff. So today, I'm very, very, very interested in our topic today. And it's going to be, and this one, I know a lot of people are going to be interested in it because I always get requests to talk about it. I get requests to do more videos on it, and that's subject to financing. Now, what I'm going to do, Chris, is I'm just going to give the folks a just quick overview of subject to financing, and then I want to hear your thoughts on it, and then we're going to get into it a little bit, right? The pros, the cons, good, bad, ugly, indifferent. We'll talk about the gurus and stuff like that. So for the people that don't know what's subject to financing, it's different than an assumable loan. An assumable loan is where you would go to the bank, you would take over somebody's loan, VA or FHA only, because the conforming loans don't do that. You would sign a novation, which means the seller is completely out of the situation. He's gone from the transaction. You've taken over his loan and you're responsible for the payments. Your name's on the note, your name's on the mortgage, right? The deed is transferred over to you. Now, what's subject to financing it's different. There are no banks that are involved. You're only taking over the person's payment, okay? The loan is staying in the seller's name. The deed is transferred from the seller to the buyer. And a few things that go along with that. You can do that a couple of different ways. Most people, the gurus, teach it using a quick claim deed. I'm not a big fan of the quick claim deed. I'd much rather do a warranty deed. But a lot of them do a quick claim deed because they're trying to do whatever they can so that the banks don't find about it. Now, one of the big things that a lot of the gurus talk about is a way to get around what is called a due on sale clause. Now, for those who don't know what a due on sale clause is, it means this. Anytime that you borrow money, you sign basically three really important documents, and then the rest are just cover your behind papers for the banks. The three important documents are the note. Now, the note is the promissory note, the IOU, right? Spells out all the financial terms and, basically say, hey, I'm going to pay you back X amount of dollars for X amount of years. All right. The next one is the mortgage. Now, this is for people that live in a judicial state. You get a mortgage. So the deed will transfer from the seller to you. The signing the mortgage, that's the lender security in the property. So they will put a lien on the property. Again, you're the homeowner, you own it, you have the deed, they put a lien on it. Now, if you default on that, the lender has to go through the court system, hence the word judicial. For those that do not live in a judicial or what we call a non-judicial state, a trustee holds the deed. Okay, so you don't have the deed, it goes into a trust. The trust will hold it, usually a representative from the bank that has it, okay? A lot easier to foreclose, a lot quicker, a lot cleaner to do it that way. Now, inside every note that you sign, there's a clause in there. It's an acceleration clause, it's a due on sale clause, and it says this. I don't know if I have the exact verbiage in front of me. I have it in my book, but it just says this. It says that if you pay off your loan, okay, you have to pay off. If you sell your property, you have to pay off your loan. Now, a lot of the gurus get around the one thing that they say, you can do subject to. It's not illegal. Just want to make that very clear. It is not illegal to do subject to financing. However, if the bank finds out, they will more than likely call the note due. What's the note? The note is that IOU that we talked about. And what they mean by calling it due is this. They literally will call you on the phone or send you written notification. Hey, you transferred the deed without our written permission. Okay. And that's the main thing. You got to have the written permission to do this. Without that, they don't know who took over that loan payment. So they have the right, not saying they will, they have the right to call the note due, meaning, hey, we can skip the foreclosure process where normally if you got to go 90 days late, they got to send you out paperwork and you go through the process. Here, if you just do that, you broke your contract and they can now start the foreclosure process. Okay, they still have to do the foreclosure, but you skip the formalities because you broke the contract. All right. And calling the note due means, hey, we want all of our money that is due payable now within 30 days. If you don't pay us off in full in 30 days, we have the right to foreclose on the property. Now, will they or won't they? We don't know. So that's what subject to financing is. Now, I'm going to give it over to the doctor to give me his thoughts and what he knows about it and whether he likes it or not. And then we'll get into some chatter about the good, the bad, and the ugly on subject to. So, Doc, why don't you take it away and tell us about what you know about subject to? I know you've done a few subject to deals, okay? So I want you to tell the folks what you know, what you like about it, and tell us about the deal that you've done or the few deals that you've done. I think you've done more than one subject to deal. Mm-hmm. So why don't you take it away and give us your thoughts and stuff on subject to?
Yeah, I've got several subject to properties, and I see it not as a good or bad thing, but it's a tool in the tool belt. So, for example, I would, to a seller, only recommend subject to if they can't pay their mortgage and if they can't sell. And you might say, well, why can't they sell? Maybe the house requires too much repair and they can't find a buyer for it, or it wouldn't be, no bank would finance it, and they just need to get out. And I can step in and say, okay, well, I will pay you up so that you're current, and then I will just pay your mortgage for you from now on. And, I'll give you some money, and then you give it the house, and then you deed it over to me, and then I have the house, and I will pay your mortgage, and you have your lump sum, and then it's my house. So that's kind of how I have structured it in the past, and I've had no problems at all. So I think that the problem that you're going to have, Vinny, is if people do that in an unscrupulous manner, like if they either lie to the seller and because the buyer in this case would know more about than the seller. So I never take advantage of my sellers. I only recommend it if that is the best option for them. So that's kind of my start, and I've done it several times. I've never had a problem with it. There are potential problems with it. But they happen very infrequently. So I guess one thing I'd like to say is that there's no data, and I looked, but there's no formal data on how frequently the note is called. However, my understanding just from all of my reading and talking to people is that the industry understanding is that it happens about 1% of the time.
Well, so if you, I'll definitely dispute that all day long. Okay.
Sure. Okay. Now, so what I would say is if you go online and if you look at not just talk to one particular person, but just look at aggregations of opinions, generally speaking, the average of what most people say. Again, this is not survey data. If you have some kind of data, let me know, but I was not able to find any. But most people,
you're not going to have a lot. There's not going to be a lot of data out there. I can tell you that right now.
Right. No, I agree.
They're not. They don't post that. But
they don't post that, so we don't know. But my understanding from my research is that most people think it's about 1%. If you have data saying it's higher than 1%, you spoke with 100 people and they all said it was 5%, then certainly let us know.
Well, here's a couple things that'll dispute right off the bat. Right, I don't think there's a lot of people that are doing subject to financing out there. I don't know a lot of sellers that would want to do subject to financing, right? Here's what I'll tell you now. I come from lending, okay? I owned a mortgage company for a long time. Here's what I'm going to tell you. For somebody to get a loan, just a normal, everyday 30-year fixed rate, whether it's VA, FHA, USDA, jumbo, whatever, here's what has to happen. You got to fill out a 4-page personal application with all your personal information on it. You have to give 2 years of your tax returns, W-2s, pay stubs, or tax returns, 3 months of your bank statements, all the pages, and 1 month of your pay stubs. We're going to pull your credit report not once, but twice. Once at the time of application and once the day before closing. We're going to do a phone verification on your job, not once, but twice. Once at the time of application and once the day before closing, okay? Now, for those that have been in the industry long enough and know all the tricks and fraud things that have happened over the years, a lot of people in the past would have Uncle Johnny down at the barbershop make up W-2s and pay stubs easily on their computer and say, here you go, Johnny, here's your W-2s and pay stubs. Oh, and if they call, don't worry, I got you covered. Okay. So obviously the government got caught on to the fraud. So what did they do then? Well, now every application, you have to sign a 4506 or an 8821. For those that don't know what a 4506 or an 8821 is, it's this. It gives the lender to write, and they do it on every file. Trust me, they don't underwrite it without it. The 4506 is a faxed request to the IRS, and is a mailed request, and the 8821 is a faxed request that they're going to get the last 2 to 3 years of your transcripts from the IRS. So you cannot lie anymore about Uncle Johnny giving you fake W-2s and pay stubs. Okay. So now to get a loan, you filled out a 4-page application. They verified your employment twice. They verified your credit twice. You gave 2 years of your tax returns, 3 months of your bank statements, and a month of pay stubs, and signed a bunch of other paperwork. Okay. Including inside a note saying that you won't do this. And for those that say, the banks only care about getting paid, I won't disagree with that statement. However, they want to get paid from the person that they approved the loan from. Now, will they call a note due if there was a loan that was in foreclosure, somebody got them out of foreclosure, it's being current? Will they foreclose on that? Probably not. And I'm not saying that they will foreclose on every deal, but what I will tell you, in this interest rate environment, I guarantee you that if the lender finds out, they will call the note due. My brother-in-law, who's the VP at a well-known bank, okay, I'll name the bank, it's TD Bank, okay? I asked him, would you guys call the note due? He said, without hesitation. Now,
yeah, of course he's going to say that. That's like saying if someone, okay, go ahead. I'll let you finish. But of course he's going to say that.
Hold on. I'm not done it yet, but I have pulled out, and I can get it in a minute. I pulled out the top 10 mortgage servicers in the country, okay, to prove my point. I called and videotaped about 3 or 4 of them. I want to get through all 10 before I post the video. And I talked to the managers of each one saying, hey, I have I didn't give them the name because this was made up. And I said, I have a client of yours that has a mortgage with you that I'd like to take over the loan subject to financing, and I need to get written authorization. Can I get that? Every one of them laughed at me and said, absolutely, positively not.
Yeah, they have to say that.
Okay.
Yeah, they have to say that.
Okay.
Am I allowed to break the rules? No. They would probably get in trouble if they said yes.
Okay. So now my question is this. So they have to say it. They'll never allow it. So why do you think that if they find out, they're not going to call the note due?
Okay, well, let me ask you a question, Vinny. You told us a story about how you were doing Section 8 properties, and
the
government pays most of it, and then the tenant pays a small amount of it, like $100 or $200.
Yeah, well, I never got paid that small amount, but
and you showed up at their house and you said, "Hey, I need my $100 or $200," and they said, "No, I'm not giving it to you." And you said, "Okay, no problem." And you went right back to the golf course.
Exactly.
It's the exact same.
Well, I
thing.
didn't go back to the golf course. I went to the golf course.
Now let's just actually say, their Aunt Tammy is going to pay that $100, $200, even though they're not the one that's responsible for it. You'd be like, great, no problem. Because you said great, no problem, even when it wasn't getting paid at all, let alone when Aunt Tammy was coming in.
Okay. It's a decent analogy. However, my tenants are still living in the house. They didn't go and give the lease to somebody else. They're still living there.
Vinny, I guarantee you that if Tom, your lease person, moved out and Aunt Tammy moved in and was paying in full, you'd still go right to the golf course. You would.
I'm not saying I wouldn't. I'm not saying I wouldn't if I was.
Banks are the same way. They're not allowed to say that they would do that, but if that was going on, imagine you're the bank and you have to foreclose. You don't want to foreclose. You don't want houses. You want money.
I'm not disagreeing with that.
I'm not, especially if they. Go ahead. I don't want to interrupt you.
No. I didn't mean to interrupt you. I'm not disagreeing. I'm not disagreeing with you on that point. I'm not disagreeing with that point. My point is this: if they find out, they will call the note due. It's not going to be a coin flip. It's, in my opinion, it's not going to be a coin flip.
They say that, and I think they're still if they find out, first of all, like, and a whole other discussion that we're going to have is preventing them from finding out.
Right.
So, for example, we'll use the Vinny example again. If you never found out that Aunt Tammy moved in and the only thing you knew was the full checks were coming in every single month, you probably would not check. There's a very, very tiny chance that you would get on your phone at the golf course and be like, I wonder if Tom is still paying his lease.
I'm not going to disagree with, I'm not saying that the banks are out there actively looking for this type of deal. However, if the insurance changes, what happens if the lender?
That is one. That is one.
What happens if the lender? What happens if the lender wants to sell the loan?
And yeah, if they want to sell the loan, that could be an issue.
It'll be a real issue because
generally, like that doesn't happen. That doesn't happen that often after the initial period.
Oh, it does.
Like, it might happen like a few years later.
Yeah. So, okay. My point exactly. Everything could be going very smooth for 2 to 3 years. Then all of a sudden, this lender wants to sell the loan, right? And for them to sell the loan, they have to audit the file. They've got to pull the file out, right? And they're going to verify everything again to make sure their I's are dotted and their T's are crossed.
In that case, if they call the note, then you would refinance into a different loan.
Okay.
That's my answer for that.
Okay. Now, I 1000% agree with that. This is where my gripe comes in. Okay. My gripe comes in because I just had somebody who was a Pace Morbley sycophant. Okay. Oh, yeah. So I spent $10,000 on Pace Morbley, right? Didn't do one deal and had she couldn't even hold a conversation with me. Okay. And spent $10,000 on real estate education. She couldn't even hold a conversation. Okay. I said to her, and I'll say her real name, okay, because I won't say her last name. Her real name is Reba, okay? Matter of fact, we're actually doing a loan for her right now. My wife's doing a loan for her, okay? Now, I said to her, Reba, I got to know her because there was a creative financing deal that was going on, and I'm helping out the sellers who got taken advantage of before, so I'm helping them structure a creative financing deal. Reba was bringing a buyer. Then she talked about her buying it, right? Talking about doing it subject to. The sellers will absolutely positively not let it go subject to financing. But that's another point. But here's my thing. I said, Reba, let me ask you a question. You're taking this subject to because you want it as a rental property to bring some rental in. Okay. Did you even run the numbers? No. Okay. You didn't even run the numbers. Okay. That's mistake number one. Okay. I said, let me just ask you this. Just going strictly with subject to financing that you want to do because you're a Pace Morbley, you're Pace Morbley student guru. Okay. I said, do you have any savings that if you don't find it, I said, because listen, Reba, payment number one is coming the month after you take over that deed. Okay. Soon as whatever you take that deed over, let's just say you take it over the second day of month one. Okay. Let's just say you take it January 2nd. They paid January's mortgage, okay? You transfer the deed on January 2nd. Well, guess what? February 1st is rolling around, and you've got to make that mortgage payment. Now, this house is vacant. Do you have $2,240 to make that payment? No. I said, well, what's going to happen if you don't get the house rented, right? How are you going to make the payment? I don't know. I said, well, what did Pace Morbley tell you? How are you going to make that very first payment when you don't even have you don't have the house rented? And the reason why she's selling it and didn't have it rented is because there's no parking. There's no parking on this house. Okay. That's why they're trying to get rid of it with creative financing. They're doing anything to get rid of it, but they screwed up last time and the tenant didn't pay them. So how are you going to make payment number one? I don't know.
I of course have that handled, but I mean, I understand your point is she was not properly educated.
Now,
I can talk about how we do that.
Right. Now, here's what I'm going to say. If I had a student like you, let's just say you were my student, okay? And I'm not going to talk about your financial situation or anything like that. Let's just say that I know that you have a job, you could refinance it, you have some savings on the side. Let's just take Reba. Let's say Reba had money on the side. Let's say she had $10,000 saved up in a bank account, okay? Let's just say she was a realtor for 5 years and she's making good enough money to qualify for a loan. And let's just say her credit was good. And let's just say the seller would do subject to financing. Would I advise it? No, I wouldn't. I'd advise her to go a different way, first off. Okay. But what if she was hell bent on it? I would say yes. But just understand, if or when they call the note due, you need to be prepared to refinance that property as an investment property. Okay. So you're looking at, if you could go Freddie Mac at 15% down, it's a single family. Okay. So you can get away with 85 LTV. You could do a DSCR loan if need be. But you could do a rate and term refinance and get that loan paid off. But I guarantee you, the majority of the people that go to Pace Morbley, they don't have a pot to piss in or a window to throw it out of. Okay. And they're the people that I'm talking about, that they need to stay as far away from subject to financing as possible. Okay. The other myth that I want to dispel right now is that she thought that she could go buy property, no money down. Okay. Now, just so people understand, that you could buy property, no money down. That's talking about putting a down payment. It doesn't mean that it's not going to cost you any money, because if you buy any property without title insurance, without an appraisal, without a home inspection, you're not a very smart real estate investor. Okay. So it is going to cost you money. The next point is, I don't know any seller besides the sellers that are, now I'm going to leave on the side for now the sellers that are in foreclosure or a couple of months behind, whatever. They're a different breed, and we'll get to them. Okay. Talking about your normal everyday salesperson, or just even maybe motivated ones. I don't know many of them, and I've spoken to thousands of people and said, would you ever give away the deed to your property, keep the loan in your name, and and everybody says no. Now, yes, are there motivated people that are totally desperate? Yes, absolutely. But they're very few, and very few and far in between. They're not. There's not many of them out there. And
I would go
ahead. I'm gonna let you speak for a while, because I just went ahead and.
Oh yeah, no problem. And I would
okay.
say, it's funny because the Venn diagram of what we agree on is there's definitely overlap, and there's definitely, I would say, certain things differently. So I only do subject twos with sellers who have those two specific criteria. One, they can't afford their mortgage, and two, they can't renovate and sell. So,
okay. All right. Hold on. Hold on.
More of those than you think.
Hold on for 1 second.
Yeah.
I want to go down each one of them that you had.
Sure.
Okay. Because it's one of the things that I teach a lot of my students, where to find deals. Okay. Go to the people that you said can't pay their mortgage. Now, are you targeting the people that have already gotten notice of default?
Yes.
Okay. So now, just for the people out there, what he's talking about it doing is something like this. Okay. Now, whether you go to real estate bankruptcy attorneys or wherever you may go to get those leads, okay, people that got a notice of default, NOD, and that just means, hey, you've missed your payments, and we're going to start the foreclosure process on you. Okay. Now, whether you live in a judicial or non-judicial state, it could take a long time, or it could take not that very long. So you target those people now, but I just want people to understand. Correct me if I'm wrong, Chris. When you go to those people, you got to get them current on their loan. B, probably give them a few dollars to help them on their feet to get them out, because they have nowhere else to go, right? C, paying all the transfer and closing costs, because you have to pay transfer tax when you transfer the deed. You're covering all that cost. Let me know if you do.
All that is correct. Yeah.
Okay. Let me also know if you do an appraisal or a home. You might not do an appraisal, but do you do a home inspection, and do you get title insurance? Go ahead. Take it away.
We don't get an appraisal. We do inspect. I inspect myself. So there is an inspection in that sense.
Okay.
What was the last one again?
Do you get title insurance?
Yes, we get title insurance.
Okay.
So yes, we do pay for those things. So I think your point's going to be people who say you'll just go and people will just give you their house for free and there's no money down. That doesn't happen at all. So we're definitely paying money. Now, and again, I think that when like the gurus say no money down, what I hear a lot is, oh, well, it's no money down because you can just put it on your credit card, which is that's deceitful language, in my opinion. That's putting money down. Or you can, get a loan from a friend or family, or you can do this or that. But yeah, you're right. No one's just, even if they're in distress, they're not going to say, usually they're like 9 times out of 10, they're not going to say, okay, you can just take my house.
Well, I think it's more like
Hopefully that happens,
999
but-
out of 1,000, but okay. I get your point.
So, I mean, that has happened before, not to me, but I've heard like sometimes people are just basically having to leave their house. And we're like, in order to save your credit,
Yes.
we will pay off everything. We'll pay, and even that's not zero. That might just be zero to that person. We usually give them money anyway, just
Right.
to, as you said, help them on their way.
Right.
But there's going to be some money anyway, even if it's not to the seller.
Well, I just want to differentiate the two things. You have money down, which means a down payment, meaning like, okay, I'm selling my house for $100,000. I go to a bank, I put $5,000 down. The lender gives me $95,000. On top of that, I need to pay closing costs, which is another $10,000, right? So when the gurus talk about buying a house, no money down, right? I think that they're trying to say, all right, you don't have to put a down payment. They're just going to hand you over the keys and walk away. Now, you still are going to have to pay money, right? It might not be money down, but you're still going to have to pay the transfer tax. You're going to have to pay for the title insurance. If you don't get an inspection, you're really kind of foolish because you don't know what you're walking into with a property. And if you take somebody's deed over and that house is falling apart, got structural issues, it's got mold, I know it's not the deed. I know the loan's not in your name. Still, you just don't want to be that kind of guy that hands the deed back to the seller.
You definitely want to do an inspection, whether
Yeah.
you know how to do it yourself or you hire someone. And
Right.
inspections are not expensive. You can
No.
just get them for like $100, $150.
Yeah.
Well worth it.
Right. It's the cheapest insurance you can ever get.
Yeah.
So my point is, and I guess a lot of my anger goes to the gurus that spew this garbage. Learn how to buy houses, no money down, subject to financing. You can just take over somebody's property. It's not as easy as that. It's not, I don't want to say, it's easy to do. Don't get me wrong. It's easy to do a deal like that. It's almost impossible to find a seller that's willing to do that. Where you're going to find those sellers mostly are the ones that that are in default, right? That they're like, okay, if you can get me out of it, I'm totally not going to ruin my credit. There's not going to be a foreclosure. I've got a couple of mortgage lates, but okay, I'll be okay, right? And if you have a person who's a decent individual, aka the doctor here, if they do call the note due, he can easily go and refinance it. And the word that I love that you said early on in your thing, you said it's a tool. And I agree with that. It is a tool, right? It is a tool. And I'm not saying it shouldn't be used, but it's a tool, in my opinion, that should be used very, very sparingly. Okay. I would do it. I would never do subject to financing, just to be honest with you. I would rather do it under an installment sale contract. I have all the same benefits. There's nothing different except for them the probability of the note being called is probably less than zero. I don't want to say less than zero, but probably 1% compared to a much higher number subject to. I mean, why not just do it under an installment sale?
I would say that you can definitely pay less if you do it subject to. So like, I'm not buying the house. Like I might just be giving the seller like $5,000, giving the wholesaler or broker a couple $1,000, and then catching them up for a few months. So
Right.
that might just be like 15 or 20,000 versus, I assume you mean buying the house contract for deed.
No.
Okay. Well,
Do the same identical thing.
Mhm.
Okay. Just do it under an installment sale. Wait a year or 2 years, refinance them out of it.
But you're paying that money every month to the seller. So you're saying just pay
I
them
can
like
I can make the mortgage payment direct. I can put it in an escrow account and have the escrow pay the I can use a third party escrow company and have the mortgage being paid. If I'm pulling somebody out of default, I'm not paying the money to the seller. I'm using a third party escrow, or I'm making the payment directly. I'm not trusting them to make the payments because I already know what they can't do it. So, they're going to be like, oh, well, I'll just use the money this month and I'll catch up next month. No. I would
You're not
use
giving
it.
the seller any money.
No, absolutely not.
Okay, well then what, I guess my question would be, why would they do that? I think they'd rather do it.
No,
my
no, no.
way.
Oh, wait. Yes, I would give the seller to move out to help them out.
Okay, well, that's what I'm saying. So
I'm just saying I would allow them to hold their deed, but I would buy it under an installment sale because I'm not worried one iota about the note being called at all.
Okay, well then, yeah, but then you have to refinance. So
Yeah,
we
at
don't
some
want
point,
to refinance.
so do you at one point. If
It's
they
gonna
call
be
the
much
note,
later. It's not gonna be
if they
12
call the
months.
note due, you will.
That's probably not going to happen in the first year.
Well, you say probably not, but
Okay, I mean, and it's, of course there's some risk either way, but the whole, and this is something I want to talk about. The whole reason, or a lot of the reason we're doing subject to, is to get a low interest rate.
right to get a lower rate.
So-
That
So
listen,
if you refinance to 12 months, you lose the low interest rate.
I'm not debating that. Right, I could hold on to an installment sale for 30 years too. I don't have to refinance them right away. Right,
Okay.
I get all
Yeah,
of the
okay.
benefits. I get all of the benefits under an installment sale as I do under subject to.
Let's talk about that in more detail because I don't see what other benefits you get. I don't see how you're more protected with a contract for deed.
Because I'm not going to have the note called due.
So,
But I just want to but let me make this very
Sure.
clear. I am not just talking about
then
you
you have to
individually.
refinance.
I want to make this very clear. I am not talking about you individually. I'm talking in a more general teach because
Yeah, no,
when
I
I
like
talk,
the idea. It
I
sounds
talk
interesting.
about the general people, like as a teacher. Okay, so when I say this, I'm not talking about me individually or you individually. I'm talking if I'm out there trying to advise the majority of the people, don't do subject to. Okay, I would do it under an installment sale because now you're not going to have the note called due. Okay,
Yeah, I don't here that one thing that I think that you're not addressing is that you're very unlikely to have the note call due anyway.
says you.
That's like saying I'm not going to go outside because I'm going to get struck by lightning.
Mm.
Yes, there is a small chance, but I'm not going to run my life.
Listen. I'm a lender, and I look at it completely different. Right? You've only been on the investor side. I've been on the lending
True.
side. I've seen a
And the
lot of
investor
notes
side.
called due. So, I've seen it. I'd rather not have to worry about that. And I have what benefit that do I have that you don't have using an installment sale?
What benefit do I have that you don't have?
Yep. Let's just change the contract. Let's just
and
change the contract.
So are you paying them the exact same amount as what their mortgage is?
I'll get
Or
them
the
current.
deed?
And I'll make the payment. And I'll do everything that you've done. Get them
You're
current.
paying-
Get them current.
You're paying the seller, I assume. You said you weren't
I'm
paying
going
the
to
seller.
I'm paying the seller's mortgage.
Okay, so it's contract for deed, so you have to be paying the seller. You can't, like, the contract for deed is with the seller. The bank's not going to contract for deed with you.
But I'm going to use a third party escrow. Let me make it clear what I'm doing.
Okay.
I'm getting them current, right? We're assuming we're talking about somebody who's in default. Yes?
Right, yeah.
Okay. Excuse me. I just wanted to make that clear. Okay. I'm going to get him current. I'm going to give him a few dollars to help them move along. Okay. Instead of transferring the deed up front under subject to financing, okay, I'm just going to sign an installment sale for whatever they owe. That's my sales price. Okay. Now, I'm going to use a third party escrow company. They cost $110 to set it up and $19 a month to make the payments. I'm using the third party escrow company to make the payments. I'm not paying directly to the seller, right? I'm just saying, listen, I'm going to be making the payments for you. Now, I'm putting a tenant or somebody else in the project, just like you did. You put a tenant in there, right? Yes?
Mhm.
I'm doing the same identical thing. I'm going to put a tenant in now. Tenant's going to
What I'm reading right now, again, I don't have a mortgage company, but what I'm reading right now is that they can still call the note due even with contract for deed.
Here's the
There's
difference.
no advantage to that.
Here's the difference. The deed
Okay.
never transfers. So the likelihood of that ever happening is really close to nil as compared to as if you did a subject to financing deal.
Well, most states do require that a contract for deed be recorded at the county.
I never
So
record
they
them.
can see that.
I've never recorded a contract in my life. I've done hundreds of them. I've never recorded one. And let me tell you a story. regarding recording. We just did a $2 million I just did a $2 million assignment contract for deed. Okay. They couldn't sell the house, had it up for rent.
I'm just reading that right now that in Pennsylvania, that's one of the few states that doesn't require it being recorded. Most states do require
Hold
it
on.
being-
Hold on. Let me.
Okay, good.
So we're doing this installment sale contract. The buyer is going, never gets recorded. Okay. It's in Pennsylvania. Contract for deed doesn't get recorded. The mortgage broker, I'm sorry, the real estate broker that brought the buyer to me, right? That I assigned my contract to them. Okay. Now I charged an assignment fee and I gave them my contract for additional monthly payments as well. Okay. So I made an assignment fee. I made monthly payments. I didn't make any money in the back end, but who cares? Okay. The realtor doesn't want to use my wife as the mortgage broker. That's fine. It's not, we don't have that choice. That's the buyer's choice. Okay. So I just said to him, I said, Matt, listen, when it comes down to it, not a lot of title companies, not a lot of underwriters or processors know what an installment sale contract is. You may have a problem. Just have them call me. I'll explain it. He goes, come on, dude. Everybody knows what the hell it is. I said, okay, Matt, I'm just letting you know. Okay. So he goes, okay. They're supposed to go to closing on a Monday. The wife is in the hospital because she's 9 months pregnant for precautionary reasons. They're bringing them in. She's having a C-section. They bring her in like 2 weeks early. She's getting ready to have a baby. They're going to go to the hospital on Monday to sign the papers. Okay. Now they've been living there for a little bit. It's time to refi. All right. I get a call Friday night at 6:00. It's the realtor. Well, by the way, yes, I got called by the title company who didn't know what an installment sale was and how to do it. Yes, I got called by the processor. Yes, I got called by the underwriter, right? I had to walk everybody through it, but we got through it. Well, Friday night at 6:00, on the weekend that Monday, they're going to closing. I get a call from the realtor who says, I need you to talk to my processor. I said, okay. She goes, Vinny, listen, my lender needs this to be recorded 12 months. I said, well, you got a shitty lender. I said, I've done 300 of these things. I've never recorded any of my contracts. I said, matter of fact, the only contract that any lenders ever asked me to do was a house that I bought from my father. They said, we want it recorded the day, like we had to do what is called prior to closing. So we just went one day prior to closing, recorded the contract, and we went to closing the next day. They wanted it recorded prior to. No problem. Recorded it prior to. Next day we went to closing. I said, I don't know what to tell you. Go send it to another lender. She's like, we're closing on Monday. And she goes, this is my best rates. I said, look, I don't know what to tell you. So we hang up, right? I said, I'm just telling you, I've done a ton of these, never had to record one of them. She goes, oh, okay. Hangs up. Matt calls me back and says, well, can Amy get it done? That's my wife. I said, of course. I said, Matt, we just closed a $1.5 million deal down in Florida. Same way. We didn't record the contract. We'll get it done for you. My wife, 3 different lenders that we called to get the best rates. She's shopping for the rates. Not one of them needed the contract to be recorded. We closed in like 7 days after that, right? Done.
I was in Pennsylvania.
It was in Pennsylvania, right? We don't need to record the contract. We don't need to record the contract.
Let me know when you're ready for me to talk.
Go ahead. All ears.
Number one, that's just Pennsylvania. I could probably come up with a small list of states where that's allowed. Most states, that's not allowed. You have to actually record it in most states, but just not Pennsylvania. Also, here's some additional benefits of getting a warranty deed through subject to versus doing a contract for deed. Number one, you have complete seller, you have protection against the seller's future liens don't attach to the home. Whereas if you do contract for deed, liens against the seller attach to the legal title. So you have more protect with subject
Chris,
to.
hold on.
Sure.
How many people who are in default are going to go get another loan that's going to be secured against that property? Who's going to lend them any money?
How many subject twos do we do that get called the note? So you keep, it sounds like you keep assuming this is a very high rate, but this is, I think it's a very low rate. And I know you say you've known a lot of people that had the note due, but number one, were those subject to? And number two, I mean, I haven't had the note called. I don't know anyone that's had the note called, except for one person. It was like 15 years ago. So it's like, yes, it's a risk. All these things are risks.
Hold on. How many
right
people
now-
how many people do you know are actively out there doing subject to financing deals and doing a lot of them? And
I know
holding on to
about
that?
4 people.
And-
So
and-
it's not a ton, but I
And
know
how
about
many
4.
are they? How many are they doing a year, and how many are they holding on for quite a while?
All the people that I know are holding on for quite a while, like 30 years.
Okay.
And what was the first question? Like, how many do they do? Like,
Yeah.
I'd say 5 to 10 a year.
Okay.
So again, not a ton. But here, let me just go through these
Yep.
advantages of subject to over contract for deed.
Okay.
So one is future liens. Okay, but maybe they're not going to get another loan for
Right.
anything. Number 2, which I think is the biggest one, if you have a warranty deed,
Yep.
then there's no problem with insurance. You just take out an insurance policy, and there's no any kind of dispute about a claim. You definitely get the insurance. And then number 3 is you have full, with a warranty deed / subject to, you have full deed rights to transfer or convey. Whereas with contract for deed, that requires the seller's cooperation to hand over the final deed.
Not if you have it in the contract written the right way. You don't.
Okay, that's just what I'm reading. I don't know
I
what the
understand.
right way is. I'll take your word for that, but we know, like, I don't have to have a contract clause saying that, which I imagine maybe a judge might ignore. Whereas if I own the warranty deed, then I don't even have to talk to the seller. I can just convey it in whatever way I want.
Right. Listen,
So-
again,
Go ahead.
I am not. I just want the people to understand.
Mhm. Yeah,
I'm
we're
not
talking about very
saying-
complex topics. It's not for beginners.
Absolutely not. Beginners need to stay completely away. That's why I can't stand the gurus online, right? That are out there selling. They're selling it to people that don't have a damn clue about real estate, and they get suckered into paying some snake oil salesman $10,000-$20,000 thinking they're going to become some rich real estate investor doing subject to financing deals with no money down. It drives me up a wall. I think that's where a lot of my anger comes from, because
it
it's
is.
not just, there's more than one of them. I mean, there's a lot of them out there that are spewing this bullshit. Okay.
And let me clarify more what Vinny is angry about. Like, we haven't talked about this yet, but the thing Vinny is angry about is he's afraid that what people will do is they'll tell the seller, oh, it's okay, I'll take care of your loan, I'll pay your loan, you're not going to get foreclosed on, we'll take care of everything, you just give me the deed, here's some money, and you go away. And then the first time it's no longer profitable
Yep.
for me, not me in particular, but the buyer, to like, oh, well, this isn't profitable anymore, I'll just stop paying, and then I'm not on the hook. The old seller was on the hook.
Yeah. And
They'll
tell
go
them what
back
they
to him.
do.
Yeah.
Tell them what they
I
do.
would never do that. And that's a key thing. I would never do that.
Yeah, but tell
Like,
them what they do. Tell them what they tell them to do.
Oh, you had an idea about that. Go.
No,
I'm
they
not
say,
sure. I don't know.
just
I
give
never
the
do it.
deed
So
back to the seller. Just give the deed back to the seller. I'm like, you stinking scumbag. MFer, you scumbag. That is not why you do real estate investing, to go hand the deed back to the seller because you couldn't satisfy what you told people. Oh, it drives me nuts.
Now, let me-
I want to,
now,
go
let me-
ahead. You go ahead. Go ahead. Sorry.
Okay. Oh, no, it's okay. And let me, and this is, I just want to take devil's advocate for a second just to see what
Yep.
you'll say about
Yep.
this. But like, so let's just say that my argument is, I'm just curious what we say. I would never do this, but I'm just curious. So let's just say that my argument was, well, I take the seller, I get the seller current, and then let's just say, like, a year later or whatever, it's just not profitable for me, and it's more profitable for me to give the house back to the seller. Now they got caught up, they're current, they avoided foreclosure, and they have their house back. So that's not worst case scenario for the seller. What
Well,
would you say about that? And again, that's not my position. I want to know what you say.
Okay. What I would say is, it's hard to disagree with that argument, right? Because the seller is getting their house back. But let me ask you this, Chris. Let me ask you this. Okay. Let me ask you this. Okay. I got to walk back because I was going over to find a file while I was having you talking. Let me ask you this. What if the seller's moved on? What if the seller's moved out of state? What if the seller doesn't want the property back and never wants the property back? Maybe he was trying to get rid of it and couldn't never get rid of it. And then you came along and, okay, you helped him out. You got him current. He's moved on with his life. He's remarried. He's in another county, another state, right? He doesn't want the property back. Then what?
Yeah, that's definitely not best case scenario, but he did avoid foreclosure. His credit was saved. And
Okay.
he is current, and he has the same problem he had before, only better. Again, I wouldn't do that, and that's not, as Vinny says, that's not the way to do real estate.
It's totally
just,
not the
you
way
know,
to do real estate. I'm going to need you to talk for a minute, Chris, because I'm going to go find a file because I want to show you
Great,
something.
great. So here's what I
Go
want
ahead.
now. If you don't
Yep.
mind, what I'm going to
Yeah.
talk about is, for your advanced viewers, I'm going to talk about how I protect myself doing a subject to. Is that okay?
Absolutely.
Okay, all right. So here's what I do, and when Vinny comes back, he can respond to this. So here's my method. So 90% of it is avoidance. It's in the bank's best interest to let you do this if you are going to do it correctly. So if you imagine you were the bank, and John Smith is not paying, and it's building up, and it's building up, and they're going to have to foreclose, and it takes a long time, and it's expensive, and they don't want a house anyway. They would rather someone come in and pay it, even if they're not allowed to say that. So then
I agree with that, by the way.
Okay. And then Chris and Vinny come in. They're like, okay, bank, we're going to pay all this off. We're going to pay all the fees. We're going to do all these things. And then we are going to be people who actually do pay the loan. The bank, regardless of what they would say, the bank should be happy about that. That is in the bank's best interest. So, and really what the bank, I can imagine what the bank wants is like, listen, don't ask, don't tell, just pay everything off, be on time every month, and just don't let us know about it. I imagine that's what the bank would want to say. They're not allowed to, of course, but that would be in the bank's best interest if they said something like that. Okay, so here's what I do to don't ask, don't tell for subject twos. So number one, I always have the seller put the property into a trust as part of the closing. So let's say it's called John Smith Trust. It's John Smith, so it's called John Smith Trust, and then the beneficiary, which does not show up publicly at all, is Chris and Vinny LLC. So that's the beneficiary, but that doesn't show up publicly. So and they're allowed to do that. Garn St. Germain allows, prevents lenders from calling the note when you put it into a trust. So
Wait a minute. Wait a second.
go ahead.
You got to. It's not just if you put it in a trust. There's an asterisk to that. There's certain things that have to happen.
That's true, but those things that have to happen are not public information. So we're still, yes, we are not fulfilling all three of those things.
It has to stay owner occupied. It has to stay with the same owner.
Yes, but the owner is not public information. I just said this is something we're doing. Like it's to the bank's best interest to put a blindfold on and just take the money.
I'm not disagreeing with you.
You're disagreeing?
No, I'm not disagreeing.
Oh, you're not disagreeing. Yeah. So, okay. So that's A. B, yes, you're right. We're not doing the three things. However, those three things are not public information. So I'm not saying we're doing everything according to our agreement. By the way, huge point. Businesses purposefully break contracts all the time. Like they're like, okay, listen, I know we agreed to do this. Remember, a contract doesn't mean you have to do this or you go to the underworld when you die. It's you have to do this or else there's this punishment. That's
right.
all contracts are.
Yeah,
so,
right.
So all the time, voluntarily, big companies and small companies say, okay, well, we decided that the consequence is better than the thing we said we were going to do, so we are going to break the contract. So it's not like we have to do it. It's just if we don't do it, there's this consequence. Now, if that consequence is not public information, and also it's in the bank's best interest for us to not do that, to not do the contract, as I've described, then that's in everyone's best interest. The bank still gets paid. They don't, they're allowed to say, okay, well, we didn't see anything. It's not public information. So the reason I brought up Garn St. Germain is that when the bank sees that it was transferred to a trust, with that information alone, they're not going to call the note.
You're so wrong, because all they're going to do is look at the insurance policy.
Any new insurance policy that I took out?
Yeah.
What, the new insurance policy that I took out?
Your homeowner's insurance policy, I guarantee, does not have the homeowner still on it.
You're talking about the new one, right?
Yeah.
Yeah, that's right. It doesn't.
And I guarantee that it's a renter's policy.
It could be whatever kind of policy we want to put on there.
I know, but I guarantee it's not a homeowner's policy. So all they have to do when they see that it was transferred to the trust is they're going to go to the homeowner's policy and see if that changed recently.
We've never had that happen.
I'm not saying it will. I'm just saying. I'm not saying they will.
Yeah.
So let me do this. Let me read
Sure.
this because this just for this is an actual note that this is the note that everybody signs when they borrow money. Okay. And I won't read it all, but let me just read this. Okay. This is number 10 under the note. Okay. If all or any part of the property or interest in the property is sold or transferred, or if the borrower is not a natural person and a beneficial interest in the borrow is sold or transferred without the lender's prior written consent, right? So that's what they want. They want written consent because they want to pre-qualify the buyer who's taking over the payments. That's why. The lender, now this is the big word for a small 3 letters, right? The lender may require immediate payment in full of all sums secured by this security instrument. However, this option shall be not exercised by the lender if such exercise is prohibited by applicable law. So if it's illegal, they can't do it. Okay. If the lender exercises this option, the lender shall give the borrower notice of acceleration, which means you've broken your clause and now they're accelerating your mortgage. Okay. That's why they call it an acceleration clause. The notice shall provide a period of not less than 30 days from the date of notices given in accordance with section 15, which the borrower must pay all sums secured by the security instrument. If borrower fails to pay these sums prior to the expiration period, the lender may invoke remedies permitted by the security instrument without further notice or demand on borrower. So all that legal jargon means this. If they find out and if they want to, they can call the note due without going through the legal process of foreclosure. You broke your contract, like Chris said, it's just a contract. You broke it.
If they find out, but they still have to foreclose.
And there's plenty of time.
It doesn't avoid foreclosure.
No, it doesn't avoid foreclosure. And if you live in a judicial state,
do this thing they don't want to do of foreclosing.
No, they don't. No, it's expensive. I agree with that. Right? I agree with that. Now, I just want to make my point clear. Certain people, I don't have any issue doing subject to financing. Okay? Like the doctor, I would say, yeah, listen, no problem. You have the means, you have the know-how to get out of that quickly where you're not going to screw the borrower over. Okay? My anger comes from the majority of people that don't know what they're getting into, don't know how to get out of it, and literally will just listen to the gurus and hand the deed back to the borrower, which is like the most ignorant thing I could ever imagine. Right?
Right. I agree 100%.
I mean, it's just so
wrong.
Yeah.
Whenever you're done out here, if you don't mind, do you want me to finish?
Go ahead.
Okay, no, I just think you're like, again, not for the beginner. So this is not like everything Vinny said is true. So this is not about making it so that there's no way the bank can foreclose. It's about giving them plausible deniability for taking the money.
Right.
Which, in my experience, the experience of people I know, again, there's no hard data on this, works well for keeping this arrangement going. So number one, if the seller puts it into a trust as part of a close. Number two, they create a party authorization so that Chris and Vinny LLC, I'll leave Vinny out of this. We'll say Chris LLC is an authorized payer so that when the check comes from Chris LLC, there's no, the bank accepts that or more likely to accept that.
Yeah. When I do teach people, if they want to do it, one of the things that I tell them to do is, in the mortgage industry, what it is, it's an authorization to release information and a limited power of attorney is what I get signed. To get signed. So this way, the authorization to release means that you can talk to any of them, and a limited power of attorney lets you sign for anything as well. So that's what two of the documents that if you're going to do subject to, absolutely positively need to get those things signed up front, right?
Yeah.
Those two things.
Yeah.
Okay.
So, and let me tell you, okay, so that's like 90% of your protection. Like them having, again, plausible deniability,
right?
That there's anything going on. They're in general, like I think to one, like we won't say a percentage, but to a certain large percentage, they're not going to want to call the loan due if the money is coming in. Could be 1%, maybe Vinny thinks it's 5 or 10 or 15%, I don't know. But the point is we want to keep this as easy for them to accept as possible. So 1 trust, 2 party authorization, limited power of attorney. All right, so number 3, I just wanted to tell a little story. The only time that we didn't get the note called due, but we got a letter warning us. And again, I'm not saying we should do this or whatever, but just to tell you the story, we literally just ignored it and keep paying, and then we never heard about it again.
What was the letter?
The letter was just something about asking us, like, why did the insurance change, for example, or something like that. Like, why did the insurance change? We noticed this was really weird. And by the way, there's a lot of stuff like that where not necessarily in Subject 2, but other things, like when I had before I knew to have each property in one LLC, I bought 2 properties in one LLC.
Right.
And that was what the mortgage was for. And then I moved them to 2 separate LLCs. And I get letters every year. Again, not telling them to do this, but I get a letter every year saying, hey, this is not matching up with what we have. And I just sign it and send it back to them.
Right.
Like, so, and it's like, they don't do anything about it.
Right.
I don't think the banks want to do anything about stuff like
We
that.
also have to remember a lot of the people that are sending these things out, they're just clerks. They don't know what they're doing. You know what I mean? The majority of people are just 9 to 5 workers. That's a lot of the people that are looking into it. I want to say another thing that gets me mad. All right. Because a lot of times I get stuff sent to me. Okay. I know you probably can't see this, Chris, but what I'm showing up on the board is this is something that came to me through one of my students who learned Subject 2 from another guru. Okay. And this is a letter that they would get signed all the time. And it just drives me up. So, and I want to read a couple of these too, if you don't mind. Okay.
No, go ahead.
Now, this is a seller's acknowledgement. That's what this is. Okay. I am the owner of the property and I have an equitable interest in the property and I'm able to contract it for sale. I reviewed the terms contained in this agreement and have accepted the buyer's offer to purchase the property. I have received good and valuable consideration in signing and by the way, I'm reading this verbatim. Okay. So the language is super swell. I've received good and valuable consideration. And that's what it says. Good and valuable consideration in signing the agreement. Now I acknowledge both the receipt and the sufficiency of the consideration. I'm satisfied with the agreement and have agreed to sell the property because it's in my best interest. I have signed the agreement being fully informed with sufficient understanding of all terms and conditions contained herein. And by the way, the lettering is so small. It's like 7 to 8 point, right? I'm having a hard time reading it, right? And I'm not confused about any aspect of the agreement. I understand I may be selling the property for less than market value and have chosen to do so because my circumstances dictate that an immediate sale, even at a discount price, is in my best interest. I am satisfied with the sales price I've negotiated. I understand that signing this agreement, I've agreed to sell the property to the buyer and I am bound by the terms and conditions described in this agreement. I further understand that I cannot change my mind or cancel the contract at some later date, nor I can continue to market the property to any other buyer. Now this font's even getting smaller now. Okay. And I just want people to see, like, I'm not kidding. You can see how small the font's getting smaller and smaller as we go down. I understand my loan has a due on sale clause, which means the lender could call the loan due and payable upon transfer, which could affect my credit, my financial situation. I understand this agreement I have signed is for the outright sale of the property and not as intended to be a loan of any kind. I understand the buyer may assign this agreement to another party, maybe closing the sale with somebody else other than the buyer. I understand the loan will stay in my name until paid in full, and I have not been promised the specific date that will happen unless so stated in another closing document. I understand the buyer may sell the house with owner financing, and I have no control over his or her benefits to do that. And I understand the buyer may resell the property and may realize a profit in doing so. I agree the buyer is entitled to make any profit that they ultimately result from the subsequent resale of the property. Right? Now there's more that goes on, but I just wanted to read some of these. And you know why they do these? Because these are the scumbags that are taking advantage of people, that if something happens, they're going to go to the judge and say, see, judge, I had him sign this. I tried to do the right thing, as they're equity stripping the seller, right? This is the shit that drives me up a wall. And trust me when I tell you, this is one of the nicer ones that are out there, right? That they have some of these sellers sign some of this stuff, right? It's just, it's the slimy shit.
Let me just ask like the obvious question.
Yeah.
the person didn't want to do that, why would they sign it?
Do you think they actually read this? Hold on.
This is getting them out.
Hold on. I want to tell you this is hand to the Bible. Okay.
Mhm.
Where this came from, one of my students paid $15,000 to become a student of this guy. They never had one-on-one training, anything, right? They paid for this, and then you watched videos. We put the video in class and we watched it all together. Now he only had access to the videos for a year. I should have recorded it. Okay. And in this recording, hand in the Bible, he said, just put this in there as they're signing all the documents. And they'll sign it. Just put it in with all the other documents.
Counting on them not reading it.
Absolutely.
Okay, see, I do the opposite.
Me too.
I have, it's one sheet, it's all in big letters, and it's like, here's the 5 key things that are most important about this contract. And they really are the most important things about the contract, explaining how it works. We call it a dummy sheet, but it's just like it said.
What do you call it?
A dummy sheet.
Okay.
So because even a dummy can understand it. We put it in very plain language. It's like, it's big letters, it's like, and then you sign each one.
What can you tell me? Tell me the 5 things, right? That the loan's staying in their name.
It would take me a second to pull it up.
Pull it up. Yeah. I'm assuming it's going to be 5 things like the loan is staying in your name, right? We're transferring the deed to us. We're going to be the sole owner. You don't own anything anymore, right? The bank may call the note due, but we'll refinance it if it happens, right? But I want to hear the 5 things when you pull
it'll
it up.
take me a second to get
take
to
your
it.
time. But this is the difference between somebody that knows what they're doing and does the right thing and the scumbag people on YouTube that say, just give the deed back, right? Because all they're doing is making money selling you a program that barely works. You got guys, remember this, and the doctor has said this already.
Okay, I found one.
These are very limited people that are willing to do subject to financing. Most of the people are in foreclosure that you've done a deal with, okay? Now, some of them might have to get out of state. They may be a veteran. They got to go, right? They don't want to rent it. They can't rent it, whatever. They just need to go, and they don't want to get their credit ruined. So stuff like that does happen. But for the most part, the majority of the people that you're going to get to do subject to are in default, which means you got to get them current, you got to give them some money, and you got to pay all the closing costs. This is not a no money down situation. And on top of it, you better be able to make the payment month after month to be able to do it. You can't count on the rental income or whatever is happening. All right. So just understand what you're getting yourself into. That's my biggest thing. And don't screw the seller over if you can't make the payments. All right, good. Let's hear what the doctor.
Yeah, and I've got the name blocked out. I could even share it if I can figure out how to do that here, if you like.
Okay.
But yeah, this is. Let me just see if I can share real quick.
Okay.
I'll have to send a request for that.
Okay.
I've got the name.
Yeah, I'll hit allow. Yep. Okay, I did that.
All right, let me try it again here. Okay. So can you see that?
I got a blackboard so far, but I don't have any whiteboard up. Oh, there we go. We got it. All right, it's up.
Okay. All right. So now, just to be clear, this is. I'm trying to get my thing out of the way. So just to be clear, we don't hide this in the paperwork. It just sounds like what you were saying. This is like, okay, now you've signed the main one, so now you're going to sign this one also.
Okay.
And we read it to them so that there's no, like, we definitely want them to understand these things. So number one, you understand that you're responsible for repairs.
Yep.
This is a contract for deed. We're not repairing anymore. You're repairing. That's a basic thing. We explain it very clearly. We have them sign it. So it's not like we're hiding it. We're very clear that, like, you were signing this sentence.
Wait a second. Hold on. I'm a little confused here.
Okay.
This form here is saying, as an informed buyer, you understand you're responsible from this move forward for any repairs that are needed at your expense. Who's signing I thought this was a form you give to the seller.
Okay. This is, I'm sorry. You're right. This is actually one that we give to a buyer.
Okay.
So yeah, it's different. That it's not, this is not subject to, this is contract for deed.
Okay.
So
get rid of this one. Let me see your subject to one.
Do
you have your subject to one?
I don't think I have a subject to one here. I just have these ones here.
Okay.
I haven't created a folder for the subject.
Okay.
Sorry. Okay. You're right. I was just giving you an example.
It's okay.
Of the sort of thing that I do.
Okay.
Like,
understood. Here,
I'll see if I can find it, but I'm not sure.
That's fine. That's okay. All right. Here's a way that you absolutely need to protect yourself. And I do this with all the deals, okay? No matter what deal it is. Forget about signing stupid ass paperwork because you just look like a jackass with this here, trying to hide it and everything else. What you need to do is you need to have a little GoPro camera and you need to record your conversation. If you want to have something written out, I'm all for having it written out as well, okay? But I'm recording the conversation saying, this is exactly what's happening. Now, let's just take subject 2. The loan is staying in your name, but the deed is transferring over to me. So I just want you to understand, you no longer own the property, but the loan stays in your name. Now, we're going to make payments on the loan, but if something happens, it's still in your name, right? I'm going to also let them know we're going to try and refinance you out of it at some certain point, okay? I'm going to let them know that I'm going to put a tenant in here, right? But I'm going to explain everything, and I'm going to have it on film. Because one thing everybody has to understand, any phone call that you make to a tenant, any letter that you send to a tenant, you're not sending it to the tenant. You're having it prepared because at some point you're going to be in front of the judge. I'm not saying you will, but that's why you're doing it, is so that if for some reason you're going in front of a judge, okay? Let's just say, and I'm not going to use Chris as this one. Let's just say these people from Pace Morbley, they go do a loan. 2 years, everything's fine. But then all of a sudden they can't make the payments. They did a lease purchase. The person's staying in the house. They stopped paying. And now they're literally, they're staying in there and they're not leaving. And now you got to foreclose and it's taken forever. You took a down payment from them. Like all these gurus say, get a down payment, sell it on their lease purchase. Another dumb move, right? I'll get into that move later, right? And now that people stop paying, now you can't make your subject to payment. Now everybody gets a foreclosure notice, and now the seller calls you up 2 years later, like, what the hell is going on, right? And then all of a sudden he calls his attorney, and now you're fighting, now you're going in front of a judge, right? He never told me this. He told me I'm out of this, yada, 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 right? That's when you pull out the recording and you say, this is what we talked about. Here it is, right? Because, Your Honor, he slipped that paperwork in there. I didn't sign that, right? He's going to say, never signed it. That's a forgery. No. Here's a video recording of exactly what our conversation was. Not only do I get it, everybody gets a recording of the recording. Everybody gets a copy of the recording, right? Because just in case, right? Everybody's happy when things go day one. Everybody's happy. Everybody got paid. Everybody's got this. Everybody's on cloud 9. It's when the shit hits the fan is when, okay, now what do we have to do? So just remember, right, that everything that you do is for the judge. So my recommendation is don't worry about, yes, have paperwork. Absolutely have paperwork. Get it signed. Get it notarized. Have a recording. And have you on that recording explaining it in very great detail that they understand exactly what's going on. And you don't have any problem. But again, I am talking not to a guy like Chris or not to a person who's an experienced investor that has the means and has the ability to be able, when the note gets called due, to get out of it. Or I'll use Chris's terminology, if they call the note due, they can get out of it. Okay, I like to say when they call the note due, but I'll say if they call the note due for Chris's behalf. If they call the note due, you can get out of it. It's a tool, but this is not a tool, like, again, the doctor said, for beginners, okay? It is not a tool for people that don't have the means to be able to get out of this deal, because you don't want to screw the seller up, because then you look like a jackass anyway, right? You're not a serious real estate investor if you're going to hand a deed back to a seller. That's just, come on, stop with that nonsense.
I definitely agree with all that. One more angle I'd like to kind of add to this conversation is every single risk that you take has a dollar value. So, yes. For example, if there was a 1% chance, let's just say, of losing $100,000, that risk is worth $1,000 to you. So you can kind of think about it mathematically that way. So right. Every single risk of them calling the note or anything related to disasters happening in real estate in general and all the kind of things, those are worth something. So yes, you do have to know exactly what you're doing. Yes, you do have to have the integrity and intent to kind of follow through, and this is your asset now, and you're going to take care of it. And in the end, you have to decide whether or not is worth it to you. Now, in my career, I have found that it has been worth it, at least so far, from a dollar perspective.
Yeah.
So yes, there is risk, but risk is worth a certain amount of money. And if you're making enough money from it and you're doing it with integrity, then it might be worth it for you. But yes, you absolutely have to know what you're doing.
Right. So just understand the reason why you would do subject to financing nowadays is, number one, you're most likely going to get a better rate than what rates are out there right now. And you're going to get a better term, right? And yes, you don't have to deal with a bank. That's all three very solid things. But don't think you're going to go in this with absolutely no money, okay? Because you still have to pay closing costs. You still should get a home inspection. You should get title insurance. You don't have to do an appraisal if you're not planning on reselling it or doing anything that right away. But you don't want to do a quick claim deed. So those that don't understand the difference between a quick claim deed and a warranty deed is this. Okay, a quick claim deed is basically the cleanest, the simplest, easiest thing. It's just somebody signing the deed over, and everything's
It
attached
just says
to
that
it.
you don't own it. That's all a quick claim deed says.
Yeah, it's just you're
Quick claim
signing
deed
your
is
rights away. Yeah.
Literally just means person A does not own this. It doesn't say somebody owns it now.
Right. You're basically just signing it away. That's it. Right.
Yeah,
Now,
this is not
they're,
mine.
right. They're mostly used in divorce cases, a quick claim deed. Okay.
If it's John and Jane,
Yeah.
and John is leaving,
Yep.
he can do a quick claim claim. So then it's just Jane.
Yes.
But you wouldn't do it to transfer
No.
to another person.
It's the worst.
Currently.
Yes. It's the worst. Now, I believe sheriff sales use a quick claim deed because they're not guaranteeing anything. So in a sheriff sale, like they're just going to give you a quick claim. I'm pretty sure they give you a quick
They
claim.
don't care.
No, they don't care. They don't care. So
They don't care.
No. So, but that's why in a warranty deed, you get all the insurances that that come with having it. So that's why if you're doing this, don't listen to the gurus and just do a quick claim deed because it's cheap, right? At some point, that's going to come back to bite you in the ass big time.
And a warranty deed's not that expensive.
No.
And you want to get title insurance anyway.
Yes. You should never buy a property without title insurance, ever. You're just waiting for something major to blow up in your face.
And my law firm's expensive, and they only cost like $500 for the warranty deed.
Right. That's
not that much.
Cheap. Right. Right. So the things you want to do when you're doing subject to, you have to make sure, number one, pull title up front so that you know all the people that are on the deed. All the people that are on the deed, you got to make sure that they're on the agreement of sale. Everybody who's on the agreement of sale, you got to make sure that you get a limited power of attorney specific to the transaction, and you get an authorization to release information from each and every one of them. Okay. Then you should absolutely do a home inspection because you don't want to buy a property that you don't know what the issues are, right? Get a home inspection. Okay. Then you should absolutely get title insurance. Okay. And then what else am I missing in there? Okay. If you want to put it in a trust, I'm all for that. Right. I don't have a problem doing that. It'll help you get around the due on sale clause. I know guys like twist like pretzels to get around it, but if you wanted to do it the right way, just call the lender and get written permission. Then you don't ever have anything to worry about.
But they won't give you permission.
No, I know that. I know they won't. But most importantly is to disclose everything to the seller and get it and have it in writing, but also record it. And it costs what? You go buy a used GoPro for $100, right? Put her on a tabletop friggin' tripod when you're signing the papers, so that if it ever comes back, you have it. Your Honor, I sat there and explained exactly how this transaction, or before it even gets to Your Honor, their attorney can see that and they're going to know that they don't have a case, right? So record it, okay? Don't be this fool that thinks you're going to pay somebody online thousands of dollars to go learn subject to financing, and you're going to go find all these homes that somebody's just willing to hand their keys over without getting any money for it, right? I want you to listen to again what the doctor is saying. The subject to properties that you've done, explain the transactions that have, you don't have to give us all the details, but
Right.
but tell us what kind of properties they were.
And so, there's two very specific
Okay.
criteria, and that one, they can't afford their mortgage,
Okay.
and two, they can't renovate and sell.
Okay.
If they had, some money or some means to renovate and sell, then that would probably be the better option for them, and we wouldn't even try to subject to it.
Right. So
If they-
when, just to be clear, so when you said the people that can't afford the mortgage, you were targeting people that are in default,
Yes, or
or
if they're already in default or about to go into
or about
default.
to go into default, right? And they want to save their credit, and
Right,
they're looking for a way out, right? So,
Yeah.
but remember, so now you might have to pay 1, 2, 3 payments to get them caught up, maybe 4 or 5 payments to get them caught up.
Yeah, I know we've paid like 12 before. Like,
Okay.
one of them I think we had like 12 payments.
Right. So they were ready to get, so their property was ready.
They were deep in the foreclosure.
Yeah.
process.
So they probably had a sale date ready to go, and their attorney's
Right.
probably
We actually
pushing
had
it
to
off.
talk- we had to get confirmation from the bank that they would even accept payment for that one.
Wow. Really?
Yeah. Like we just had to make sure that if they haven't like committed to foreclosing.
Right.
So
Right.
I spoke with them and they were okay with.
Right. So basically what that's called is reinstating the loan. They had to reinstate the loan.
Right.
Right. So reinstating the loan, they had to pay all the back fees. They had to pay all the back interest. They had to get them caught up. Right. So that cost 12 payments. And just imagine if it was $1,000 a month in payments. Okay. Because now that's 12 payments. That's $12,000. That's if the payment was $1,000. Now, if it was
And
less than
that's one-
1,000, it'd be less. Right.
Yeah, and that's one like we didn't have to, nor were we inclined to pay the seller anything.
Right.
They were just, they weren't getting anything anyway. They were getting out.
Right.
We saved their credit for them.
Right.
So that was a huge service.
Well-
we ended up paying like $50,000 or something like that in fees, back mortgage,
Right.
all stuff like that.
Right, but here's what I want to make very clear: that 50,000 is a lot of money for, especially for investors that don't have any money. That's why they're out trying to do no money down deals. But I guarantee you, even though you paid $50,000, you either have a shit ton of cash flow or you've got a shit ton of equity on that deal,
Right.
right?
Yeah, or both.
Or
In that
both,
case.
right? Or both, right? Is that
Yeah,
fair to
yeah,
say?
I think that was like, I think it was like a 2.99% interest rate.
Yeah.
So it was beneficial for me also.
Of course, it's free
It was
money,
beneficial for them because they couldn't hold on to it.
right? It's free. That's a sad thing.
And it was beneficial for the bank because they get their money instead of a house. It was literally a win-win-win.
Right. I don't know if the bank cares about, their 3%. It's free money. They could take that back and get it at 6 or 7.
Yeah, and that
now,
is
but-
one thing. And you mentioned this briefly. We haven't really talked about it, but I would imagine that if you get a sort of with a low interest rate, which is kind of the one that you would want.
Yeah.
Well, the bank also wants that. So
Yeah.
they would probably be more motivated to call the note in that case.
Yeah.
Even then, even then, I think that they'd rather have the money. But I would agree that they're more likely to call the note
Yeah.
if they notice it,
Right.
if it's a very low interest rate.
Right. So what we're talking about is he got an interest rate of 2.99. Today's rates are, let's just say they're 6 or 6. I don't know what they are, but I've been out of the mortgage industry for a little bit. So let's just say they're 6%, 6.5%. So the bank is saying, wait a minute, we got a loan out here at 2.99. We could take that house back and just resell it. And if we get another loan on it or we get our money back, we're not making any money on that anyway. You know what I mean? It's basically free money. But
Yeah, and one thing for your underwriting as an investor, I always make sure that the property would cash flow even if we had to refinance.
yeah.
So it has to be that good of a deal.
Well, my thing always was I'm either cash flowing $500 minimum, like that's my bottom line, or I'm buying this house for equity, right? Like right now, I'm getting into a deal right now. I was just out there yesterday and the day before, and the guy's literally begging us to buy this house. It's a steal. The house literally appraised for $2.7 million 2 years ago. The guy when I was leaving, like I was there with a partner student of mine, right, who's a contractor, and he had it listed originally a year and a half ago at $2.9 million because it appraised at 2.7. So he overpriced it. Now he was emotional about this house because it was his forever house, and he was going to hand it to his son, and his son passed away, 45 years old, died of cancer. Horrible story. So now he just wants out. Now he had offers at when he had it up, he had offers at like 1.9, 2 million, 2.2, 2.3, turned them all down. He lowered his price. He's at $1.3 million right now. So I'm like, we got to go buy this house. Like, this is just a slam dunk of a deal, right? Now, obviously, we went there, and the reason why he can't sell it is a absolutely gorgeous house. It's a brick Georgia colonial, right? The red brick Georgia colonial. The problem is because after his son passed away, he literally just let all the landscaping eat the house. It's basically, you can't even get in the driveway without, literally the trees were smashing against my truck. I couldn't pull around the house, and you just can't see the house. But if you remove all that landscaping, the inside is still a pretty good looking house on the inside. Does it need some lipstick? Yeah. But I was talking to Real. I'm like, I just can't believe this house isn't sold at this price. And he's like, Vinny, it's been on the market over 450 days, and people just think there's something wrong with it now. And he goes, we had offers when we had it appraised at $2.7 million. Now, it's in a great neighborhood with $1 million properties. It will not appraise for less than 2.7 right now. I can guarantee that. But the problem is nobody wants to buy it for whatever reason. But we won't make cash flow on this house, but we will definitely make a lot of equity. Okay. So my thing is we're gonna buy it, and we're gonna turn around and sell it under an installment sale contract is what we're gonna do. But there's one where we know we wouldn't have any cash flow on that deal because it's a $1.4 million deal. Like, it's not going to be a lot of cash flow, but there's a lot of equity. So you're right. You're either buying it, like, I love how you said it the one time. I've never said it like that, but you want gold in this hand or you want gold in that hand, right? Which is cash flow or equity. It's both gold. You know what I mean? But you got to be smart. You cannot buy a house when you're only making $100 a month in cash flow, right? You got to learn to run your numbers. So anyway, so my apologies for that quick little story. I get sidetracked a lot. But the subject to that you've done, right? So the people understand. You have to understand the audience that's going to be willing to just hand the keys over and let you take the deed from them and have their loan stay in their name. It's somebody who's going to be that desperate that's going to lose their house to foreclosure, or somebody who's in the service that's just leaving anyway, which you can go assume that loan anyway, by the way, FBAs are assumable. So it's somebody who's desperate, but it's still going to cost you money out of your pocket. And one of the deals, you said how much? $50,000 it cost you to do that one deal?
Yeah.
Okay.
It was like I think it was a $330,000 fair market value house. It was in good condition.
Okay.
But they were so far behind. I think it was 12 months or something like that.
Right. Yeah.
It was like $56,000, something like that.
Yeah.
All was said and done.
Yeah. So they were going to lose. They were going to lose that house and walk away with nothing. So you helped them out by not going to foreclosure, which is better on their credit report. Yeah, they got 12 times 30 days late. It's going to take a while to recover, but it's not a foreclosure, which is better. They can recover from that. And number two, right? You gave them I'm assuming you gave them a few dollars to help them out to go rent something and get them on their feet. Right.
Yeah, we gave them a small amount, smaller than normal.
Yeah. Well, listen, you just got them caught up.
Right.
You think they lived in a house for free for 12 months, they could at least have a couple dollars saved to move out.
Yeah, exactly.
You know what I mean? But you feel bad for them because if they couldn't afford a 2.99 payment, what are they really going to be able to afford to live in? It's a sad state of affairs that, you can't afford that. But like you said, it was a win-win-win for everybody. And that's the kind of deals you have to go for, right? You want everybody to be a winner. Like this house that we're going to purchase, this guy literally, when I was leaving, he stopped me and started talking. It's like, please help me out here, help me out, buy the house. I'm like, all right, George, listen, we just need to figure out if we're going to get a loan or do it with private money. You know what I mean? We'll help you out. And I'm like, George, I just feel bad that, because he's like, it's worth at least 2.5. I'm like, I know it's worth at least 2.5 million. Like, I'm sorry that you got it down to 1.3. He's like, he's like, you see what people got eaten, but it will be a win-win deal because it'll be a win for us because we're going to make, $500,000. It's going to be a win for him because he finally gets out of it after a year and a half. And it's going to be a win for whoever buys the property because they're going to walk in to about 700, because we're going to only sell for like 1.8, 1.85. They're going to walk into, almost $1 million in equity. So there's win-win-win deals to be had. And that's kind of how you want to structure deals. But, so with the subject too, is like the folks need to understand you're not going to be able to go buy property with no money. And the other thing that I think, Doc, you'll back me up on this. I don't know, because I think you do private money, but I think I don't want to get into your stuff, but most private lenders, I don't know any private lender that will go into the second lien position. Now, hard money will do it on short term if you've got a very low loan to value, like 40, 50% loan to value. They'll go in the second lien position if you've got a good equity, something that has good equity in it. Because I was building a house one time, and I just bought another house, and I was building a lot over here, and I was a little cash shy at the moment, and I needed $50,000 to finish. I went way over budget, and the bank wouldn't give me any more money because, like, dude, you already went through your contingency, this, that. I'm like, I just need $50,000 to close it. Now, the house, I had $1 million into it, right? All together, all total $1 million with what I bought it, what I borrowed. The house was worth $2.2 million. And I owned a house right around the corner in Villanova. So I had a friend who said, hey, I got a hard money lender. He'll give you $50,000 today. I'm like, really? And he did. He's like, hey, I don't mind. I will go into the second lien position. Why? Because the house was 95% done. I just needed some stonework to get my U&O done on the front of the house, right? And he was hoping I would foreclose because now he's got a house that's worth $2 million with only $1 million owed on it. So he was begging for me to go into foreclosure, but he got paid off in 30 days. You know what I paid him? I borrowed 50. I paid him 100. He's like, anytime you need money. I'm like, listen, my friend. He came right to my house to pick up his check. I said, I am telling you right now, I already forgot who you are. I will never, ever make that mistake again. I don't know who you are. And the minute you walk out the door, I'll never remember who you are. Your number's already deleted out of my phone and everything. I mean, he made $50,000 in a month, a little over a month. But, you know, hey, I was harder for the money and he was there and I took it. But my point is, there's no private lender that will ever go into the second lien position, and they certainly will not go behind a subject to financing deal. Your thoughts on that, Doc?
Yeah. I think, do you mean hard money lender?
Hard money or private?
Okay. Well, I mean, I think I define private money a little differently than you do.
Okay.
But yeah, generally a lending company of any kind will not go into the second lien position except in rare cases, like an 80-10-10.
All right. Well, let me explain for the folks. Let me explain what I say the difference between hard money and private money. All right. Hard money lenders are a lot of institutional money and some private lenders, but they only lend on tough situations or the situation like I was in that get super high interest rates. Okay. Like I borrowed 50, I paid back. He made 50 grand. That's a hard money lender. That's like the last resort. Private investors are like doctors, lawyers, private people that are willing, that want to earn 8, 10, 12%. They're not hitting you for 15, 16, 18% or 50%. They're not loan sharks. They're just looking to make a better interest than in the bank. They're private people looking to say, hey, you know, if you got a good deal, I'll lend you the money, right? Just pay me back in a year, 2 years, but short term, 1 to 2 years max. That's private money, right? And the reason why I say that, like when I hear Pace Morley say, you know, he talked about, I didn't put a dime down. I put no money. I'm like, well, how did you pay for the transfer tax? Who paid for the home inspection? Who paid for the transfer? Like, who did all that stuff? Then he says, I didn't use any of my own money. I have a private lender. And then I'm like, well, you've got a bunch of students. Why didn't you give your private lender to your student and let him do the deal? Because it was a shit deal. That's why it never worked. You're only doing it for social media clicks, making money off the social media because the numbers flat out didn't work. And here's the other thing. Private lenders will, especially to newbies or anybody else in the business, will not go in the second lien position, and they will not go behind a subject to deal, meaning that the subject to deals in first place, that let's just say the doc took it. So the doc took a property subject to and he wants to get a loan. So a private lender, like he has to pay the $50,000. Let's just say he can get this subject to deal. There's a lot of equity, a lot of cash flow, but he doesn't have the $50,000 to get him current. So he's looking for somebody to lend him the money. So he's going to go to a private lender. Unless they're a family member or somebody that you're very good friends with, business individuals who are private lenders will not lend that $50,000 and go into the second lien position, and they won't go in the second lien position behind the first loan, which you just took subject to, knowing the bank can call the note due. So that's what I mean, the difference between private and hard money. Sorry, go
Yeah.
ahead. All yours, Doc.
No, it's okay. Usually when I say private lender, I'm referring to like friends and family. So
Okay.
again, I think Venn diagram of our definitions. But yeah, basically, I think the thing we agree on is that if a person doesn't know you and
Yeah.
they have a business of lending money,
Yes.
that they're not going to go in the second position and they're not going to do subject to.
Right.
So I think we agree on that.
Yes.
Like now you could now if you have like a friend or family,
Yes.
then you're responsible
Yes.
for that person in a way that you know, like I'd say for like a hard money lender or an institutional, you're like equally responsible, the two of you. But if you're borrowing money from a friend or family, you are solely responsible.
100% responsible. Right.
You need to make sure that you go out of your way to make sure that that deal gets done correctly.
Right. So when you hear a guru online say, yeah, just go get a hard money loan or a private loan to pay the down payment, pay the wholesaler, pay the realtor, you're not going to find one of those unless they're related to you and they're only lending it to you because they're your family.
And then you better know what you're doing.
Then you better, yes, then you
better know what you're doing.
You
you're
better
gonna have
know what you're
Thanksgiving
doing.
with that person.
Right. And when I saw that video, and we should play the video one day online and critique it. I said, why didn't he, because he's like, oh, look at my student. Like I gave him $10,000 wholesale fee. I'm like, if you were a real teacher mentor and you had a private investor, why didn't you give the private investor to your student so that he could have done the deal? Right. But then when you actually looked at the deal, he paid he paid both sides he paid the whole real estate commission, right? Which is like 50 grand. He paid almost full boat asking price for the house. Now he got it under value, but it was a shell. He paid like $300,290 for the house. He took some of it subject to, right? And then he took it subject to, he paid some equity to the seller, paid the realtors off, paid his wholesale fee, and then borrowed money to go fix the house up. I'm like, that's why he didn't give it to the student, because no private lender will give anybody that kind of money to pay off the equity, but not be in the first lien position. You're just paying the difference between the subject to and the sales price, right? So no one's going to give you that money. No one's going to give you the money to pay the realtors. Nobody's going to give you money to go fix the house up and be behind a subject to deal. It's not going to happen. And then when I actually ran the numbers of the house, this guy wasn't making any money. And I'm like, by the way, who's making why this house is vacant, getting repaired, and it's a shell? Who's making those subject to payments when you don't have a tenant in there? Because there's no way he has a UNO, right? Or a CO, whatever, I don't know what you guys call it. Certificate of occupancy, use of occupancy. I just learned it as a UNO, and I have a horrible time saying UNO. So, it's a shell. How are you putting people in there? So, that monthly payment's coming up. So how are you going to make that monthly payment? It's like, it made no sense whatsoever. But I'm like, oh, you know what? He's not really a real estate investor. He's a social media guru is what he is, And that's what drives me nuts, because I'm like, everybody's like, oh my God, it's the greatest thing since sliced bread. I'm like, are you guys idiots? Like, do you guys know anything? Like, oh my God, it's so frustrating. But
and just people are desperate out there, and they'll believe anything.
Yeah, yes. And that's I guess that's what bothers me, is that they take advantage of those people, right?
Yeah.
They're so hungry to become a real estate investor, right? Because they're so sick of their 9-to-5 job, they're sick of their life. They just want to become a rich real estate investor, that they're willing to listen to any of this garbage. And that's what drives me nuts. That's one of the reasons why I got into this, right? Because I had a friend that got taken.
He'll actually teach you.
What's that?
I said that's why I said just join Vinny's group. He'll actually give you real information.
Yeah, I mean it's just sad all the way around. I feel bad for the people that go and pay him that money, because listen, I literally had people call me up from Pace Morley and Grant Cardone, and they don't know anything. They can't hold a conversation. Like, when you first reach out to me, I'm like, oh God, yes. You're like, hey, I don't need any help. I just, I like your stuff, right? Somebody likes, and I'm like, yes, finally somebody that has a little bit, not that I mind teaching people, but it's nice to have somebody that you can talk to on your level that understands the game. You know what I mean?
My wife
nice.
always says, it's like, oh, I'm so happy you found a real estate friend who knows about real estate. Because, I usually talk to people that, regular people that don't necessarily know about it.
Right. Well, it is true. You know what I mean? Like, I'm on the phone most of the day talking to people that don't have a clue. You know what I mean? Like yesterday, literally, I got a call 11 o'clock last night to help out a student of mine who has a friend. I don't know if it's a girlfriend. I know he's married, but I'm on the phone at 11 o'clock with some unmarried girl with a 2-year-old kid, so I don't know. Right? I'm not passing. Anyway, she buys it. Listen to this, Chris. Ready for this one? And this is what drives me nuts. She has a realtor. Okay. She wants to buy this house. So she's going to buy it cash. Now she's not very sophisticated. Okay. She's smart, but not as sophisticated. She's not a real estate investor. So she's going to sell her condo and she wants to buy this fixer-up house, right? But it's not really like a total fixer-upper, but it needs some work. It's an estate sale, okay? So it hasn't been taken care of. It's an older person lived there. So, they don't really spend a lot of money on preventative maintenance. Okay. So she goes to the realtor, friend of hers, says, hey, I want to buy the house. Guy says, okay. So she goes, I think I'm going to pay all cash because I'm going to sell my condo, right? And I'll just pay cash. I have the savings now. So I'll just use my retirement and pay for it. So they come back and say, listen, this is an as-is offer. Now, and I said, yeah, I get as-is. Listen, I've bought plenty of houses as-is, but you know what I did with them? I tore them down because I know what I was buying. I'm buying it as is, no contingencies, because I'm tearing the damn thing down. The realtor put 0 contingencies in there. None. Now, did she have a home inspection? Yeah, but was it a contingency? No contingency. So this thing was getting out of hand. So she calls up, can I get out of this contract? And I was like, Pam, no. Do you want to know why you can't get out of this contract? Because your realtor, now this is a Jersey deal, by the way. Your realtor should have immediately said to you, do you understand with you putting $15,000 in an earnest money deposit, saying you're paying all cash with no contingency means that you must go to closing on this deal. And if you don't go to closing, they can sue you for specific performance. At a minimum, they're going to take your $15,000. Then they're going to try and sue you to go to closing. Now, whether they can force you or not, that's going to be up to a judge, okay? But if you try to sue them and you lose, you're going to have to pay their attorney fees, all right? So they should have sat her down and said that. And she goes, well, they didn't tell me any of that. But here's the worst part about it. In Jersey, you have a 3-day attorney review, meaning that contract has to be sent to an attorney for them to review it and get back. So I said, did you do an attorney review? She goes, yeah, I sent it to I said, well, what attorney did you hire? Oh, I don't know. My realtor gave it to me. I said, so this is a friend of the realtor? Oh, yeah. I said, did your realtor, right, say to you any of this stuff? No. So not only did the seller, the agent says, oh yeah, the less contingencies you have in there, the better your offer will be and you'll get the deal. Meanwhile, the house hasn't sold forever. So the lawyer just rubber stamps it, doesn't tell her, listen, do you understand that, hey, you sign an all cash offer with no contingencies, you can't get out of this deal? Because I said to her, Pam, I said, listen, if you came to me, the first thing I'm going to tell you is put a mortgage contingency in there. Because I can't tell you how many people, friends that I've known that says, I'm going to buy it all cash, then came to me to get a loan afterwards. Put a mortgage contingency in there because you might change your mind and say, hey, you know what? These repairs are getting out of hand. I might want to get a loan to do it. And it gives you an out. The second thing.
I have a couple of things about that also.
Okay. And then let me just finish up. And the last thing, and then I'll listen. And the last thing you should have had in there was a due diligence or home inspection clause for 30 days that if you didn't like what happened in a home inspection, you could get out of it and you walk away, right? And so I had her just write a letter to both the attorney and say, like, why didn't you look out for me? Where's your fiduciary duty? You're supposed to be on my side. You just rammed it through and you rubber stamped it. Well, luckily today, like after we sent these emails, luckily today, she got out of the deal. But my point is like unsophisticated people would get burnt by not knowing how to write a contract up. Floor's all yours.
Yeah, you can't go into a deal like submissively, like relying on other people. So a few things I want to say. So, well, number one, in a contract, I always have an inspection clause where it says you can get out. And I've got stories where before I knew about this, there was a lot of problems. But inspection clause, buyer can leave for any reason. I think
Yes.
that's standard in most states. Like any reason, I don't need to give you a reason.
Right.
No reason at all. I can leave within this time period.
Right.
For me, I try to do like a 1/3 of what I think if it's going to close in 30 days, I try to do 10 days. If Vinny says 30 days, whatever you want to do, I'd say at least like 10 days where you can inspect, you can run your numbers more deeply. So, but you can leave for any reason. That's important to say.
By the way, that's called by the way, sorry to interrupt. That's called a due diligence clause. Go ahead.
Yeah. And then and if you have financing, then you'll want a financing inspection.
Listen, trust me when I tell you this, even if you think you're going to pay cash, I can't tell you how many people have changed their mind halfway through and said, oh, you know what? Maybe I should get a loan. So put a mortgage contingency in there just in case, right? And it gives you an out anyway.
Yeah. And then we could talk about contingencies. We could have a whole one about.
Oh yeah. Well, this would be our great subject to get into. Yep. So go ahead.
And then certainly definitely you should understand these contracts, like read them, understand them, and also talk to a lawyer if you need to. So here's the thing that I'm going to add to the conversation that Vinny may have never said before. Maybe he has, maybe he hasn't. So you always should get a digital copy of the agreement.
Oh,
here's
absolutely.
what I recommend. If you're relatively new, yes, you should absolutely learn. Yes, you should absolutely read it for yourself, but get it and run it through AI. AI has the ability now, and it didn't like even a year ago, to read things, even if it's not a fillable PDF, even if you can't select the numbers, it can just look at an image of a contract and read it, which it wasn't able to do, I think, even a year ago.
Right.
So, and what you should do, so have it summarize it, read the summary, and then you can have a conversation, even a voice conversation with your AI. You can put it in voice mode and say, okay, so what are the warnings or what are the things I need to look out for in this contract? And it will tell you, and just have a conversation for an hour. It'll be the best hour you've ever spent.
Absolutely.
You'll really understand what's going on in there, and it will warn you about, possible pitfalls and things like that. So don't rely on other people, even a lawyer. I have lawyers, I have CPAs, but if I only relied on lawyers and CPAs, I would have lost tens, hundreds of thousands of dollars on various things that they missed or just didn't tell me or assumed I knew and I didn't know or whatever. So AI really is one of your best friends. I would say it's, right up there with having a lawyer and a CPA. Run your document through it and just have a conversation with it. Say, okay, what are my pitfalls? What happens if this happened? What if I decide to do this? Can I get out of this contract? Ask it all those questions and force yourself to sit there for an hour and have this conversation. And then you will learn so much more. Like, I guarantee you will learn so much more than any other way of going through this. Even reading the whole thing yourself. Have a conversation with AI about your document. That's I would do that for insurance policies. I would do that for, of course, purchase contracts. Any kind of document that you have to sign, I would run it through AI and talk to it for a while first.
Yep. Well, just to further on the point that you talked about knowing it yourself, is that I said, this guy is either in on it, on this sale, or he just wants a commission, or he's totally incompetent. And she's like, he's been my friend for a long time. I'm like, how can he be your friend when he didn't put any contingencies in there to help you at all? He literally let you hang out there naked. Like, you literally, if they wanted to, they could keep your $15,000 earnest money deposit, which, by the way, you should have probably only put $5,000 down. But that's another story for another day. And you should have at least had a due diligence clause and a home inspection clause to get you, or a contingency, I'm sorry, to get out of this. And then for the attorney to just rubber stamp it and not sit down and say, do you know what you're signing? Do you understand what you're doing here, that you have no outs in this contract? You must go through with this. Do you know that? For her to just rubber stamp it, but she was friends with the realtor. They just don't care. And this is my point. That's why I can't stand realtors. They're check chasers. This guy cared more about his commission than that poor lady, right? And the sad thing is, now she's not going to use them. And now he lost the condo sale, $500,000 condo sale and a $500,000 purchase on this property. He lost both of them. All because he couldn't just put a simple clause to protect her because he wanted to go make $15,000 commission. It's pathetic.
Yeah, I've got, like I said, we should have a thing where we have stories. I've got a story about that before I knew what I know now, where, and they gave me this contract that was very strange, but I didn't know it was strange at the time. And we didn't have AI back then. And it was, instead of saying you could leave for any reason, it said you have to have and it gave like 3 criteria. It was like, you have to have a substantial material, something else.
Material
reason for
defect.
leaving.
Yeah.
It has to be a defect. It has to be material, and it has to be latent. That's what it was. So it's like, if you could see it, it automatically prevented me from getting
Right.
the contract.
Yep.
It was. I've never seen a contract like that.
Terrible.
Again, every time I look back at it, I realize what a worse contract.
Yeah. Terrible.
I didn't know at the time.
Yeah.
Fortunately, I did get out of it, but because I did find material latent defects in the property,
Yeah.
and I wrote this whole thing up with all of them, and they did have to let me out.
Well, but that's good. But just imagine people that don't know. And this
I know.
poor lady
You
didn't
have
know
to know.
anything. Called me
And-
11 o'clock, 12 o'clock at night in a panic, the two of them in a panic. You
And
know.
I cannot overemphasize. AI can read it, and they will come up. Even if you really know what you're doing, it'll still come up with like angles and information that you
Right.
probably.
Right. Well, I agree with that. Well, listen, Chris, this has been fantastic. I like this subject, right? We got some good points out there for the people. It was good. I know you get to pick the subject next time, so I'm looking forward to it, right?
Well, it's
So
fun.
we'll get to hear you talk more than me this time, right? I want to hear, that'd be better. I'm
I'll
sure
definitely
people,
want to know what you have to say. Also,
I'm sure people are tired
that's
of
always the
hearing me
fun
talk.
part. That's always the fun part of the podcast. Vinny goes into a
story?
side rant about something that happened in 1993.
Yeah, I got him. Trust me.
That's always the best part.
But see, when you do things so long, so much shit happens to you. Do you know what I mean? Like, you're, I don't want to say you're in the beginning of your career, but relatively speaking, you're kind of like a newbie in it.
Compared to you, for sure.
Yeah. So like when you're in it for 30 or 40 years, and not only that, but I'm also, my life is in like the mortgage industry and building homes. You know what I mean? So my whole life has been buying real estate, like, buying and holding real estate, building homes, doing mortgages. So I got so many stories. You go through the ringer on a lot of this stuff. I've been, so I got a lot of stories. So, but we'll get to a lot of them. So, but I have to tell you, I enjoyed this because
Me too.
there's no doubt I'm an absolute hater of subject to financing. I mean, I am an absolute hater. And that's why I'm glad that you're not on the hater side, because people do need to hear, they just don't need me to constantly rant how bad it sucks and how horrible it is. I'm not against subject to, only if it's people that are similar to your situation, where you know what you're doing and you have the means to get out of it and you're not going to screw over the seller, right? The shit that these gurus are spewing online, that's the stuff that drives me insane and drives me nuts and makes me batty, right? And that's why it's put such a bad taste in my mouth and why I hate it. But I agree with you. It's a tool. It's a tool to be used. And if you can use it in the right situations, use it.
And help everybody.
It will help everybody. I agree with that. And I think that's why you can't just go to these people that only know subject to financing, because that's just one tool out of a big toolbox. There's so many other ways and methods of doing things that's just one of it, right? And that's a minor one. And about all the properties, you've only bought, how many properties have you bought subject to?
3, I believe.
3 out of how many do you own?
Not
20?
many. I mean, they don't come up that much, and when they do, a lot of times they're not worth it. I mean,
Right.
Really the main benefit for you is you can get someone with a lower interest rate. That's why it's so popular recently, because we had those
Right. Because
rates in like 2021.
Exactly. So it was good to hear another side of it. So I enjoyed that. So, all right, my friend. Well, listen, I'm looking forward to our next one. Right? I think we usually do it, try to get it on a Sunday night. So maybe this Sunday we'll get another one out there. So I'm looking forward to shoot me your thoughts. And if anybody has any thoughts on what we want to talk about, let us know. We'll get to it. So
yeah, we'll answer them in the comments.
Yep.
Leave a comment, we'll answer it.
Yep. All right, my friend. Listen, thanks as always. I look forward to our next one, my friend.
Thank you. Me too.
All right, Chris. Take care. Take care, everybody.
Take care.